Hi, my name is Robert Paul. I'm one of the partners in the US Family Office. As we approach the end of the UK tax year, there are lots of things that American families based here need to think about in terms of planning. Starting with number one, UK tax efficient planning. This is predominantly ISAs and pensions. The US doesn't recognise the ISA wrapper, so it treats it like a normal investment account. So we have to make sure that, one, the underlying assets we invest in are compliant from the US perspective, but two, when we're managing those accounts, we think about the US tax liability on that as opposed to it just being tax-free in the UK. The second element of the first point in terms of end of tax year planning is pensions. Pensions are something that most people in the UK will do, and there's no reason why American citizens can't do pensions. We just have to be a bit careful about, one, how does the US treat the actual pension vehicle we're using? And then two, how does the US treat the contribution we're making, whether it comes from our employer or from our own pockets? The second point is making sure that we look at our capital gains and capital losses for the UK tax year. Remember, a lot of American families based in the UK will be taxed in the UK on their worldwide investment. So that includes any investment accounts in the US or investment accounts offshore or in any other jurisdiction. So when we're looking at our UK end of tax year planning from an investment point of view, we have to take in any assets we've sold overseas which have created gains or losses. We have to look at them from a sterling perspective. The UK only cares about sterling losses and gains from the 6th of April 2018 to the 5th of April 2019. Third element, and this is for this year only, is the cleansing of assets. The UK changed the rules on the 6th of April 2017, which basically meant that large swathes of Americans who lived in the UK for a long term, but perhaps were paying what's called a remittance basis charge to only be taxed on their assets in the UK or earnings in the UK, suddenly had worldwide tax applied on their global assets. Now, a lot of these assets, because of the nature of how they were earned and where they've been taxed, couldn't be brought into the UK without suffering further tax. However, as a window of opportunity, the UK government basically said, right, we'll give you 2 years to go through a process of cleansing those assets. So going through those offshore accounts which perhaps couldn't be brought in and breaking down what is clean money, remittable to the UK, and what is mixed money, i.e. not remittable to the UK. The fourth thing we've got to focus on before the end of the tax year is our gifting or charitable donations. Obviously, a lot of American families will be looking at gifting asset either down the generations or giving money to charity. Both of these things we have to think about, okay, what's the UK rules on gifting? What are the US rules on gifting? We don't want to do something which is fantastic for the US because it's big tax in the UK if the rules don't cross over. And likewise on charitable donations, it's all very well giving to your US school because you get a US tax deduction. If the UK doesn't recognise the charity, you won't get the tax deduction. So just being a little bit sensible about how you gift before you do it.